This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Mergers and acquisitions in Canada's oil and gas sector had a record start to the year in 2021 as companies took advantage of improved oil price expectations amid the pandemic recovery, and many industry participants expect the trend to continue. The flurry of deals underscores the Canadian energy sector's desire to grow to benefit from the rebound in oil prices as global fuel demand picks up. It also reflects smaller companies betting on economies of scale. Oilfield services provider Secure Energy Services proposed $478 million merger with Tervita Corp this month took year-to-date Canadian energy sector deals to a record $18 billion, according to data from Dealogic.
Indonesia will now grant miners export permit for unrefined mineral ores, even if construction of their refining facilities is delayed, a move aimed at lessening the blow to the industry from the coronavirus, according to a document seen by Reuters. Indonesia announced last year it would ban exports of unprocessed ore by 2023 to spur higher-value smelting industries in the country, and that only miners with refining facilities that were meeting their construction schedules would be eligible for export permits. The new regulation exempts nickel ore exports, which were banned last year to encourage foreign firms to help Indonesia's bid to build a full-supply nickel supply chain, from extraction to production of electric vehicles.
Moving on to the top news in the energy sector.
Oil prices fell more than 4% on Tuesday, hit by concerns over new pandemic curbs and slow vaccine rollouts in Europe as well as a stronger dollar. Brent crude futures were down $2.56, or 4%, to $62.08 a barrel by 12:16 p.m. Eastern Time, 16:16 GMT, having hit a low of $61.41. West Texas Intermediate crude fell $2.65, or 4.3%, to $58.91, after falling to as low as $58.47. Both benchmarks traded near lows not seen since February 12. The front-month Brent spread flipped into a small contango for the first time since January. Contango is where the front-month contracts are cheaper than future months, and could encourage traders to put oil into storage.
U.S. coal, natural gas and motor fuel producers get implicit benefits worth tens of billions of dollars a year by not having to pay for the damage their products do to the climate and human health, a study said on Monday. As the world begins to transition to technologies that emit less pollution to generate electricity and fuel vehicles, economists are attempting to estimate the cost to society of burning fossil fuels. In a study published in the Proceedings of the National Academy of Science, Yale University economist Matthew Kachin calculated that U.S. fossil fuel companies get direct benefits of $62 billion a year in implicit subsidies due to what he calls inefficient pricing. Next, we have the top news in metal markets. Copper prices fell on Tuesday as tit-for-tat sanctions between China and the West and new coronavirus lockdowns in Europe spread a sober mood through markets, while aluminium slipped due to rumors that the Chinese state will sell stockpiled metal. In official trading, benchmark copper on the London Metal Exchange, LME, was down 1.1% at $9,013 a ton and aluminium was down 1.7% at $2,234. Both metals have rallied from slumps early in the pandemic as industrial activity revived and central banks pumped cash into markets.
Global crude steel production rose 4.1% to 150.2 million tons in February from a year earlier, World Steel Association data showed on Tuesday. Crude steel output from China, the world's top producer and consumer of the metal, increased 10.9% to 83 million tons in February.
We will now look at the top news in the agricultural sector.
Russia's government plans to extend retail price cuts on sugar and sunflower oil and eliminate some import taxes in its battle to tame the country's rising food inflation, it said in a statement on Monday. Since December, Russia has imposed several grain export taxes and other measures. Producers of sugar and sunflower oil agreed to reduce prices with retail chains until the end of March. The government will discuss extending the price reduction agreements on sugar until June and for sunflower oil until October, the statement said. The government will also discuss eliminating taxes on imports of up to 350,000 tons of white sugar between May 15 and August 31, it said. That is all for today's news on commodity market. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from